We're talking about Riversdale Mining this time. Its shares are up more than 2% in Sydney. It's trading at a 2-month high. This with Rio Tinto stepping up its pursuit. Riversdale mines coking coal used to make steel, of course. Prices of the commodity are at a record high. Rio wants control of Riversdale's projects in Mozambique in order to boost its coking coal reserves. So what's stopping one of the world's biggest mining companies getting exactly what it wants? Well, let's take you live to Australia now to discuss this. We've got Fat Profits' Colin Whitehead with us. Good to see you, Colin. So as I understand it, Rio is in it for the long term here. It says it's happy to own a minority stake in Riversdale along with Tata and CSN. This is, of course, because it can't get Tata and CSN to sell their shares to Rio.
That's right, Lindsay. I didn't catch the entire question there. I've got some interference coming through my earpiece here, but essentially the situation is Rio is looking originally to gain control of Riversdale, and it's really all about its Benga, Mozambique coking coal project. Now, Mozambique's a very exciting area. It has similar characteristics to the Bowen Basin, from which most of Australia's coking coal, and in fact also thermal coal, is shipped out of from Australia towards China, India and other markets. Now, it's really a strategic play for Rio to gain control of this asset for the long term. They haven't been able to get near that 50%. They've lowered it to a 47% target because that would then just get over the line in terms of the other major shareholders, CSN and Tata, who have about 46.9%. From there, and I would say we do expect them to be able to achieve that 47%, from there, over time, they're probably going to be able to eventually get control. Potentially one of those other major shareholders could look to sell down sufficient stock for Rio to take that greater than 50% position if Rio is prepared to come to some form of supply arrangement or something along those lines. So it looks like Rio isn't going to get exactly what it wants right now, but probably will do in the future. When in the future, Colin? Well, we'll have to wait and see how things pan out. If they do just achieve the 47%, then it may be within the next 12 months or so, possibly slightly longer than that for them to eventually secure the full control of Riversdale. It really depends on the market. If we were to see a major correction across the commodities market, across the coal market specifically, then obviously there's going to be more motivation on the behalf of the sellers to actually engage with Rio and make that trade. If the coal market remains buoyant, actually as we expect it does, absent some other extraneous event from left field, then it's going to take a little longer. But they should be able to just creep up the register over time. Back to the strategy of this move, Rio trying to tap the market for the steel demand. It has been seen as underweight in coking coal. Do you think is that accurate, and does it really need this acquisition that it's going after? What Rio really needs to do, as any major resources company needs to do, is secure that long-term growth potential. Now, they have huge growth in iron ore in Western Australia from the Pilbara region. That's the bulk of their business. Energy, which is really comprised of coking coal and thermal coal, is about 11% of Rio's business. So it's a smaller component, but it's certainly, in terms of the long-term fundamentals, a very attractive area to maintain exposure. And if it can get a foothold in a region, or a greater foothold in a region such as Mozambique, which is really in its infancy in terms of developing its own resources, then it's really looking at a number of years of additional growth coming out of that region. And that's really what it's all about. That's why, although they're paying a fairly full price for the stock that they are acquiring at this point, up to $16.50 for Riversdale, which is a 46% premium to where Riversdale was before this came out, it's, from a long-term strategic perspective, not necessarily a bad price to be paying. Okay, Colin Whitehead from Fat Profits, thanks very much for your insight there.